Yesterday, I watched Jerome Powell of the Federal Reserve make his announcement that the federal interest rates would be increased another 75 basis points.
Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate.
For me, this was not a surprise at all, and it was totally expected, but the markets took a hit anyway. I watched Jerome Powell in his demeanor, as I have with prior announcements, and I have to say, he has been very consistent and very straightforward. The number one issue with the Federal Reserve is that they want to reduce inflation to 2%. Period. End of story. And the Fed won't stop until that happens. They have made that very clear.
We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Jerome Powell has acknowledged that there will be collateral effects such as higher mortgages, slower real estate market, and even higher unemployment. Jerome Powell is essentially trying to break the back of consumer demand to get the economy to cool down.
We're taking forceful steps to moderate demand so that it comes into better alignment with supply.
Although Jerome Powell has acknowledged that progress has been made, inflation is still too high.
Inflation remains well above our longer-run goal of 2%, and the recent inflation data again have come in higher than expected.
Quite honestly, I'm a bit annoyed myself with the never-ending increasing prices in almost everything I buy. As far as I'm concerned, inflation is still alive and well. It's on the streets. What I'm also concerned about is whether you will hit that like button for me in these tough economic times. But if you hit that like button, I will reward you with a photo of my cat. Here is my other cat, Jaggy. I agree with Jerome Powell that ongoing inflation is damaging, especially to the less affluent members of society.
My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
But a lot of people in the real estate industry are understandably upset with Jerome Powell because of the sudden slowdown of the real estate market. In fact, it's coming down in some areas. Now, I don't actively sell real estate, so I can be a bit more impartial and less emotional about what's going on. I've had a couple of conversations with people I know, and I told them that what Jerome Powell announced was no surprise. The crazy real estate prices coming to an end was no surprise. The fact that mortgage interest rates could hit 8%, as I said in a previous video, is coming closer to reality.
We still have some ways to go, and incoming data since our last meeting suggest that the ultimate level of interest rates will be higher than previously expected.
I've heard from some in the mortgage industry that they believe that after the first quarter of 2023 that interest rates will start coming down. To me, that kind of talk is fantasy thinking. I tune that talk out because this is totally contrary to what Jerome Powell has been telling the public, especially as we go into 2023.
The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
He has said that future increases may not be so steep as they have been, but he anticipates that there will still be interest rate increases as we go into 2023.
As I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal.
And even if interest rate increases were to suddenly come to a halt, he has plainly said that that doesn't mean interest rates will be lowered.
The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
He has stated that he will simply leave the interest rates sustained to keep inflation in check. The general idea is just because interest rate increases stop doesn't automatically mean that we're going to return to dropping interest rates. The repeated stated goals by the Federal Reserve is to achieve a sustainable 2% inflation and not simply hit 2% then go back to crazy times. The point of my making this video is not to argue for or against what the Federal Reserve is doing. What I am trying to do is get people to actually listen to what is being said and stop engaging in wishful or fantasy thinking as if this is total guesswork of what is coming. It is not total guesswork because the public is being told, but only a very small number of people like myself are actually making the effort to watch him and his 50-minute press conferences. I plainly told a friend in the mortgage business that I totally disagreed with what she was told, that interest rates were going to start dropping in early 2023. I told her that was wishful thinking based on what I heard from Jerome Powell. The reason why I can confidently say that about Jerome Powell is whether you agree or disagree with what he says or does, he has been incredibly consistent and transparent with what he sees are the next steps. As far as I can tell, he has followed through each and every time. It doesn't mean he cannot be wrong or he cannot unexpectedly change course. However, he doesn't have a track record of being flaky or saying things recklessly. I want people to pay attention and actually listen to the source themselves, instead of projecting what they want to happen and what they hope to happen, or make uninformed guesses. I don't have a crystal ball, but I have a trail of YouTube videos from Jerome Powell that what he has told the public. I have watched and I have listened. Just to be clear, I am not a doomsayer or I'm yelling that there is going to be a nationwide real estate crash, but I am not naive to believe there won't be localized pain in a lot of markets. As with any economy, how you feel will largely be a condition of your individual circumstances. I have tried to warn people I know to take a patient, cautionary approach during this transitionary period. A recession is still a very real threat. This is no secret if you have been following business and economic news. If you have an interest in listening to Jerome Powell himself, it only takes 10 to 15 minutes of your time to listen to his announcements. All of this is recorded on YouTube for anyone who wants to watch. It's really not that time consuming, considering that your economic life will likely be impacted by what is being announced. As always, do me a favor and hit that like button and check out this next video. Don't forget to subscribe to my channel if you want to stay updated. Thank you for watching, and I will see you in my next video.